we like to say that emissions follow dollars. So wherever you're spending money within the organization, you're going to have emissions associated with that portion of your company. And so what we find with a lot of clients in the readiness portion is that their finance or accounting team is pretty far removed from their internal data collection processes, which can really hinder their ability to collect strong data and do a lot of strong quality checks on their data against financial data.
Welcome to the Carbon Management and Accounting Podcast. I'm your host, Aaron Stainthorpe. This podcast is brought to you by Northstar Carbon and Impact, the carbon and sustainability management platform built by sustainability professionals for sustainability professionals. Northstar helps companies simplify GHG accounting, improve data quality, and stay audit ready across scopes 1, 2, and 3 emissions so teams can spend less time reporting and more time driving real impact. Today, I'm joined by Jaclyn Sherman, Sustainability Analyst at Sensiba. Jaclyn brings a unique perspective to our conversation. She made the leap from field scientists and biology to corporate sustainability, and now she's working with the food and beverage companies to help measure their carbon emissions and leading GHG inventory assurance at Sensiba, a top 100 U.S. accounting firm and certified B Corporation. Jaclyn previously worked at B Lab and has a strong background in B Corp certification. What really stood out to me in our conversation today was Jaclyn's practical insights on measuring carbon emissions and her approach to GHG assurance. Let's dive in. Jaclyn, thanks so much for joining me today. To start, can you tell us about your role at Sensiba?
Yeah, well, first of all, thanks so much for having me. I guess I'll start with Sensiba. So we're a traditional CPA firm. Like you said, we're one of the top 100 accounting firms in the US, and we're a certified B Corp. So we were actually the first California-based accounting firm to become a B Corp back in 2018. We offer a number of different services at the firm: audit, consulting. We have a risk assurance practice. And then we also have a dedicated sustainability department as well. And so within that sustainability department, we help clients with a number of ESG related services, including GHG accounting and GHG assurance, which is primarily the work that I'm focused on. And then I kind of had an interesting introduction to the firm. I interned with Sensiba when I was in college back in 2019. That was my senior year of college when I was studying environmental science and economics. And this was before Sensiba had become a B Corp. It was before we had a sustainability department. And my internship under the mentorship of one of our partners and directors at the firm was to basically bring pen to paper and write a business plan for Sensiba on how they could create a sustainability practice and ultimately become a sustainability consultant and assurance provider. So that's the abbreviated version of how I got there. And 2 years later, post grad, I was reconnected with my mentor of the internship at Sensiba and said that he was starting up the sustainability practice and asked if I was still interested in the line of work. And I came back and joined the firm, and it was honestly kind of a no-brainer for me.
That sounds like one of the more impactful internships I can imagine, thinking that your internship really planted the seed for a lot of the work that you're doing today. I did want to ask about your personal journey because, as I understand it, some of your early work was actually being a field biologist. And so I wanted to ask about that shift to now doing sustainability and carbon accounting, particularly for corporate clients.
I do honestly find myself pretty surprised at how much crossover there has been over the years between the two fields. So I guess to back up a little bit, after college, I was really interested in being out in the field and getting a stronger understanding of how ecosystems and watersheds interacted and how I could get my hands dirty and work on restoration projects. I started collecting data and monitoring different environmental behaviors across a number of different organizations. And I started working in the foothills of the Sierra Mountains in California on the Yuba River, which is a beautiful, wild and scenic river. And I was monitoring water quality. And then I was also doing some high alpine restoration work in meadows and lakes. I was looking at aquatic invasive species. And then I went on to monitor endangered salmon runs in Northern California, just north of San Francisco and Marin. Having a background and experience in field sciences has made corporate sustainability a lot less abstract for me. I guess an example, so one of the companies I was working for right out of college was doing a number of meadow restoration and carbon sequestration projects. And in that area specifically, it was an old mining town, and the land was historically used for logging, grazing a lot of cattle ranches. And so over time, the land was pretty eroded and had some pretty poor vegetative cover, really high GHG emissions, pretty low carbon sequestration rates. So a lot of the work that we did was revegetation, increasing carbon sequestration rates in meadows, which have a number of benefits beyond that little area. And then when I think about how that work shows up in what I do now, I think whether it's carbon accounting or greenhouse gas assurance, it really does help to have tangible experiences and understandings of carbon and carbon sequestration. And having seen the in the field or on the ground realities, I think in a way keeps me pretty connected and excited about the work that I do.
Thank you for sharing that. It's definitely a very interesting career path, but I think many of us in the carbon accounting space, a lot of the work can sometimes be quite abstract. I like to joke that we're measuring invisible gases. And so anything that keeps things grounded and thinks about the real world impact or how that actually shows up can be really impactful. I did want to ask, you brought up earlier all the different services Sensiba provides, and I know a lot of your work is on greenhouse gas assurance, and so I wanted to pivot to talking about that. I wanted to first see if you can help our audience unpack what assurance work is and how that might differ from verification. And I also wanted to ask if you could talk about some of the things that come up when you're doing assurance and how you might think about data management frameworks or the data that goes into that.
Verification and assurance are used pretty interchangeably in the GHG space, but there are a few differences between them. I think basically what it boils down to is how the verification standards apply, and how they define it. So, for example, under ISO, I would say that verification is more of an umbrella term used throughout the standard. And then under a standard like AICPA, which is basically written by accounting professionals, the more common umbrella term would probably be assurance. So when we talk about a verification engagement, that is basically how we're verifying the data and making sure that it makes sense and that it's reasonable as a third party. And then assurance is kind of like the accounting industry's language that is layered on top of GHG reporting. So the verification engagement would be conducted at a level of either limited or reasonable assurance. And then the difference between limited assurance and reasonable assurance is kind of just the rigor of the verification activities. So for limited assurance, it's less involved, less timely, less costly. So it results in a much lower confidence in the accuracy of the data, which isn't necessarily a bad thing. And then there's reasonable assurance is that's much more intensive and involved. And it requires more time, more energy, more money, more resources. And so you end up with a higher confidence in the accuracy of the data. And then I can talk a little bit about validation. So you can think about that as if verification is looking backwards at GHG data, historical data, or previous year's data, validation kind of looks forward. So with validation, you are basically looking at projected or planned GHG reductions to see if they're reasonable before they happen. So that's kind of the difference between all three of those. And then I think to answer the second part of your question on management frameworks, we at Sensible like to start our clients off with an engagement called assurance readiness. And you can kind of think of it as a pre-assurance activity. We're mostly looking at how prepared the client is for limited or reasonable assurance, whatever they're seeking. And then from there, we can offer recommendations on what they should work on before an assurance engagement begins, so that it runs smoothly. We're asking, show us how you calculate everything and show us the emission sources and how do you know where you're getting your facilities and vehicles fleet, and then who's responsible for collecting natural gas data or electricity data, and how is that entered into a spreadsheet or software, and then who's checking to make sure that the activity data, if that's therms or kilowatt hours, actually matches the dollar amounts on the invoices.
I also was really intrigued to hear you talk about readiness assessments because I think prior to us talking about this, I was less familiar with that term. And it feels very helpful for a lot of people to understand the lay of the land before diving in and doing a full greenhouse gas inventory. Can you speak to, in your work, do you see a lot of clients do readiness assessments before they dive into an inventory? Or is it really a smattering that many clients approach this in different ways? And some people do a readiness assessment, but others are already in the midst of doing a greenhouse gas calculation by time you start working with them.
Yeah, so it's a mix. I think, at the end of the day, it's kind of like the gift of time. If a client does have time and there's not regulations that are pushing them to get limited assurance quickly, then usually they will opt for readiness. I think a piece to the readiness portion that I didn't speak on before is kind of how in the readiness phase we see how closely tied greenhouse gas data and financial data is. So we like to say that emissions follow dollars. So wherever you're spending money within the organization, you're going to have emissions associated with that portion of your company. And so what we find with a lot of clients in the readiness portion is that their finance or accounting team is pretty far removed from their internal data collection processes, which can really hinder their ability to collect strong data and do a lot of strong checks, quality checks on their data against financial data. For example, I was just working with a client who was having a hard time pulling together a full list of all of their facilities. And we asked them if they had asked their accounting or their financial team for data in the readiness phase, because leases have to be recorded on a balance sheet per accounting standards. And sure enough, they hadn't. And it was a quick, easy fix to the problem. But this is something that is so important to have before limited or reasonable assurance. And I think readiness can be really useful for helping clients kind of take a step back from their current processes and really just rethink how they can collect stronger data and just get more people involved at their company who are already existing stewards of the data.
That's very helpful to hear. And while you were talking, I wrote down the phrase emissions follow dollars because I think that's actually very helpful for a lot of us in this space where we're trying to track down data and thinking about how Sensiba has really leaned into being a CPA firm, how that lets you take a unique lens to doing sustainability services and greenhouse gas accounting. I did want to ask, in the frame of emissions follow dollars, when you start looking at clients and thinking about whether it's a readiness assessment or whether they're already in the midst of doing their inventory, scope three is usually where we start to get to places where sometimes the data quality is not as good or there's just more complexity. Can you speak to any work you've done on readiness assessments for agricultural companies, and if you have any guidance that you'd offer when, that last example, people didn't know their full facilities footprint. With scope three, you're actually getting outside of your immediate company ownership. Where have you seen either that same framework of emissions follow dollars or just using a readiness assessment framework help with scope three accounting?
Yeah. So I think with readiness, we're able to see how feasible it is to collect spend data versus activity data. For example, let's talk about category 3.1 purchase goods and services. It's huge. It's typically about like 80% or more of a company's entire footprint. And it's overwhelming. And most companies run into really massive data sets. And, most of the time, if it's a first inventory for a company, they're going to be collecting spend data for that category. And even though collecting activity data is always the primary goal, it's a gold standard. I think collecting spend data is really not a bad place to start. If you can kind of look at the spend hotspots, if you're able to pull a general ledger or a P&L statement from your accounting team and you're able to look at, you know, the hotspots. So like where are your largest spend categories? And then from there, you can start categorizing the data and apply emission factors to dollar amounts. And then I would say also within this, like do some preliminary research on your suppliers and see if they have any publicly available emission factors or emissions data on the products that you're purchasing from them. If you can apply more accurate emission factors to your calculations, even if you are using spend data, if it can come directly from your supplier, then I think that makes your calculations even better. And then as your inventory evolves year over year and becomes more robust, you can kind of look at sending out supplier sustainability surveys to see if your suppliers are possibly creating emission factors or maybe if they're not public, then you can request them. So I think there's a lot of chance to get to know your supply chain in a GHG inventory, and the readiness phase again helps you take kind of like a step back from all of it and do some relationship building.
That is great advice. I wanted to flip and ask about the opposite end of the spectrum for sustainability practitioners or companies that might have a more mature inventory management history. When you think about inventory management plans and data management, how people should be thinking about future proofing their inventory. I was curious with a readiness assessment and really just providing assurances for companies. You're looking at how their inventory is set up and how they're taking in data, how they're doing data quality checks. What advice would you offer to people to future proof their inventory and really be prepared for the landscape of GHG accounting to evolve over time?
We talk about this all the time in readiness that documentation is everything when it comes to future proofing. If you can imagine your sustainability lead or whoever's responsible for collecting your GHG data just left suddenly the next day, would your company be able to pick up where they left off or would you be completely starting over? I think there's a lot of risk as an organization to have these GHG processes just kind of living in people's heads, siloed to one or two people within the organization. So, whatever you can do to document that institutional knowledge and put it down into a standard operating procedure, an SOP, um, the less risk there is. And also, again, the better positioned you are to have a smooth audit and conduct smooth inventories over time. And then you mentioned solid inventory management plans for auditors, especially. I think seeing how calculation methodologies changed over time, how facilities were retired and added to an inventory is super crucial to see. And it can also be really important for a company to look back onto. Like right now, I'm working with a winery for the second year, and it's amazing how the previous year's inventory management plan really set me up for success this year. I was basically able to go back into the IMP and see exactly who I had previously collected, purchased wine bottles from, or who I had previously collected packaging data from, or where the waste data came from. And then I was able to go directly to those people. They were the data stewards, they were the champions of that data, and it really did make the process exponentially more efficient. And then I guess the last thing I'll say too is that solid documentation really does make your data 10 times more meaningful. Let's say you're able to show that your methodology for calculating employee commuting changed over time and it evolved and that's why your emissions decrease. That's amazing if you're able to show it on paper. Or if you switch suppliers from Taiwan to Mexico and that's why your upstream transportation decreased, that's incredible, but you have to show it on paper, um, not just through, your GHG data. So if you write everything down, it can really help tell the story of how your emissions changed over time. And that's really how you drive change across your organization.
Building off that, you've seen the evolution of GHG accounting from spreadsheets to now purpose built software that's using AI assisted tools. I wanted to ask about the technology element of this and how you're seeing AI show up both in GHG accounting and also doing assurance. with data that might have been compiled using AI. Just talking about how documentation and inventory management plans are so important to having a robust GHG inventory and making it future proof and think about transitions. Where do you see automation providing real value versus where do you think human judgment is still needed? And as someone who's providing assurance, can you speak to how you see these new technologies, new tools, AI kind of interfacing within that whole process?
We know AI is the hot topic of the dinner table every day, but it really is honestly being built into most softwares for better or for worse. So I think it's something that we need to, adapt and just get familiar with. With GHG data, we're working with massive data sets. So I think when it comes to AI assisted tools, it can be really attractive, specifically if it's sorting data or applying emission factors or running through, a company's general ledger. There's no doubt that it does save a lot of upfront time and energy. But I do still think that a good portion of time on the back end is still needed to review these systems for accuracy. And yeah, we still do have to apply human judgment to the output of these systems. I don't think we have strong confidence in their ability to create 100% accurate data. So in the GHG space, I've seen a lot of tools starting to use AI when it comes to scope 3.1 purchase goods and services. They have these AI or API integrations where you can connect an accounting software to the GHG software and basically upload and apply emission factors to every single expense from the company's reporting year, which is huge. I mean, that saves a ton of time. But I think from an auditor's perspective, when it comes to AI, we're doing a risk assessment. And we're doing a risk assessment on a few things. So, one is over reliance and overconfidence on the AI system. And then another is whether anyone's doing manual or human checks on the data quality. So, once it runs through the AI system, is there someone reviewing a certain percentage of the data or the largest, at least, categories, the most material categories to make sure that everything looks sound? And I think that's just going to continue to evolve. And AI is going to continue to show up in GHG software. So I think we have to start building confidence in the accuracy of the data.
I think AI holds a lot of excitement, but it also needs to be tempered with ways to check and validate that data. I think I had a separate conversation where one of the guest speakers was saying you can't verify a black box. And AI itself is not always a black box, but there can be a lot of data transformations and it can be hard to follow all that logic. So it does seem like trying to connect some of the threads of our conversation, having robust documentation is important. And while AI can streamline things, if you lose any of that ability to follow the data trail, it definitely seems like it presents a risk.
Yeah, I completely agree.
I'd like to now zoom out a little bit and ask you about Sensiba and really, this idea that it really feels like you planted during your internship. Sensiba is a certified B Corporation and has a dedicated Center for Sustainability. So that's not typical at many accounting firms. And I wanted to ask how you think that B Corp context helps shape the sustainability work that you do and what it's like being part of a CPA firm that is explicitly trying to use business as a force for good.
Like I said before, being a B Corp's pretty centered to Sensiba's firm values. I think as a B Corp, we're pretty uniquely qualified to help other companies become B Corps or, just with their sustainability initiatives, whatever it may be. When we give advice and are consulting with other companies, I think our approach is we're doing this and here's what's worked for us and what hasn't worked for us in the past. And we do end up sharing a lot of our internal policies and documentation with clients so that they can use it and they don't have to start from scratch. I think being a B Corp or even a company that identifies with B Corp values, we're constantly finding ways that we can improve upon ourselves as a firm, whether that's how we treat our customers and give them a better experience, or how we treat our employees and offer them better benefits, or how we can focus on our environmental footprint, or how we maintain a level of governance that supports our sustainability initiatives and really allows us to be a business with strong ethics. It's funny, I do a bit of work with our new hires at Sensiba, and I lead some internal sustainability trainings, and I actually wish that I had started counting this, but, the amount of times that people say that they decided to join our firm, over another accounting firm or another company, because they liked that we were a B Corp, and they felt that it was important to have strong value alignment with the people that they worked with.
Jaclyn, I wanted to ask, you're earlier in your career as a sustainability analyst, although it's clear from this conversation you have a ton of expertise, particularly in the carbon accounting and assurance space. For listeners that are in different stages of their career in carbon accounting, what's been your experience learning this work? Are there resources, certifications, or other learning approaches that have been really valuable for you? Has it mostly been on the job training? And is there anything that you wish someone had told you when you were starting out on the carbon accounting space?
Yeah, so kind of a combination of everything. I've taken a few courses that kind of formed my background in GHG accounting. I took the Greenhouse Gas Management Institute or the GHGMI diploma program for measurement reporting and verification. But prior to that, I really did come in with zero GHG experience. And then earlier in my career, I think I also just learned a lot from diving into work that was quite honestly way over my head. But I figured it out and I researched as I went. And there's a lot of really incredible resources on the internet and companies sharing out a lot of information. So the internet was my best friend. And like being in the sustainability space, there's so much to learn. I think that can seem like a barrier to enter the space. But at the same time, I do think that sustainability is rapidly evolving every single day. So I would just say stay curious and definitely stay adaptable.
Well, thank you for sharing your journey with us. I wanted to now transition to the implementation minute. And I wanted you to imagine that it's Monday morning. A sustainability professional just finished listening to this episode on their morning commute. What is one thing you think they should do when they get to their desk, something that takes 30 minutes or less, but really helps with their GHG inventory management or propel their career in the right direction?
This is by no means a revolutionary answer to this, but I like to start my day out with some good news, something that's moderately positive or inspiring. I think people can relate to that. So I would say spend the first 30 minutes of your day reading up on some cool companies out there that are really moving the needle in the decarbonization world or the sustainability space. Just the other day, I was reading about Cliff Bar, which I think is headquartered in California. They're doing some really cool work around on-site power generation at their headquarters. They have a gym full of stationary bikes that their employees can use that are hooked up to generators, and they wire back to the electrical grid, so their employees can virtually take a break, get some exercise, and they're simultaneously keeping the lights on at their office. I read just the other day that Lego, has tripled their spending on sustainability initiatives. I think it was about like 1.4 billion annually, which is huge. There are just some really cool and really large companies out there, that are really moving the needle and publicly disclosing all of this so that it is available for people to read and get inspired by. And then I think it also helps you realize that sustainability is not just math and science. It's not just standards and data. I think it's a lot of creativity. And I think the more creative that we can get in our approach to all of this, especially when it comes to decarbonization, I think the better positioned we all are for creating some deep changes in the space.
I think that's a beautiful answer. And I think all of us in this space need creativity and inspiration and really to learn from other people's vision to help propel us forward. So thank you for sharing that. As a follow up, I wanted to ask if there's any single resource in particular that you'd recommend our audience checks out.
Yeah, I really like the newsletter called Sustainability Simplified. Tim Moen is the author. He's a former executive at GRI or the Global Reporting Initiative. And he basically takes the top five most important sustainability news stories of the week and he puts it into a short and sweet, digestible email. And I think it's just a really good way to stay up to date on everything.
Thank you. We'll make sure to share that out. Before we wrap, I wanted to give a quick thank you to North Star Carbon and Impact for supporting this podcast. If you're looking for an easier, more transparent way to manage carbon and ESG data and prepare for audits, reporting, and decarbonization planning, visit northstarcarbon.com to learn more or request a demo. Jaclyn, where can listeners connect with you and follow the work that you're leading at Sensiba?
I am on LinkedIn. You can check out also our sustainability page at sensiba.com. And yeah, I'd love to hear from you.
Great. Well, Jaclyn, thank you again for joining us today. If this episode was valuable to any listeners, please share your biggest takeaway on LinkedIn and tag us so we can continue the conversation there. Thanks again.
Thank you.